ARM is certainly riding the wave of M&As in the sector.
Yes, well, pensions business is essentially an asset management business, and therefore scale is critical. So when opportunities like this present themselves, then of course the bigger players need to take advantage of them and basically grow scale. And you need a certain threshold, obviously, to improve profitability and drive the business. So where opportunities arise, I think it only makes sense that companies like ours basically take them.
Now, a new banking license regime initiated by the Central Bank of Nigeria has got deposit money banks looking to dabble in non-banking sectors such as pension fund administrators. Now, analysts say that they are driving the wave of M&As that the sector is seeing right now.
Yes, that, and of course the fact that, as you just mentioned, the Pension Commission has put a deadline for recapitalization. So it's really a regulatory-driven phenomenon. And I think both ways, or I mean, you can refer back to what happened in the banking sector and see how the industry was transformed. So I would say the development pension sector sort of opened a new vista for the industry, and I think there is a lot of room for growth. There's a lot of room for greater dynamism in the industry, and I think it's a very positive development.
Well, I'm curious. I'm curious. Right now, there are 24 players in the sector. After this wave of M&As, how many players do you think Nigeria's PFA sector will be left with?
It's hard to tell, but I can tell you that beyond the first 10, who control about 90% of industry assets, it's really difficult to talk about profitability or this kind of size and scale to be able to operate optimally. So I would say perhaps that's my cutoff point. I'll be looking at 10 players afterwards.
Now, looking at the pension fund administrators' fund price, now PFAs are experiencing pressure from contributors to move out of equities and invest in the fixed income segment of the market, which, of course, since 2008 has not had such a good run. What do you have to say about this?
Well, you know, the pensions industry is essentially a long-term play, and they're quintessentially a long-term industry. So the fact that pension funds are moving away into fixed income is not really the ideal. And it's really driven by two factors. The fact, as you said, that equities haven't done so well, but also by the transfer window that's about to open, where contributors are going to be allowed to move between pension funds. I think has driven a lot of risk aversion, especially amongst the smaller players, which is why recapitalization is an important development, because it allows beyond the recapitalization and beyond the opening of the window where the industry settles into a new paradigm, you probably see pensions begin to migrate into their more natural, you know, their natural operational, basically scheme. You know, in other words, focusing on more long-term assets and not just equities, obviously, real estate. Private equity, things like that.
Now, I just want to say, I mean, we know that this new wave of M&As is not the only new thing coming up. In the sector, we're hearing that PENCOM is looking to separate the current retirement savings account, which is just one account, into more than, about 4 segments to accommodate different investment profiles.
Well, as far as I'm concerned, that's probably the most interesting development in that area over the next few years, because what it does mean, as you may know, many of them have moved well beyond or well below the cap for equity investments, and that was driven by the risk aversion we spoke about. But then this new scheme is going to allow, or is going to impose minimum equity investments. And now it's very interesting because it's really a demographic issue. Because if you look at the profile of contributors, about 30% are under 30, about 65% are under 40, and about 90% are under 50. So you see it's a predominantly young population set. So essentially what you're going to see is, depending on how PENCOM plays it, you're probably going to see a lot more aggressive profiles come into play. Now, they could do it either way. We're not quite sure what the details are yet. They could use age as the determining factor, in which case the bulk of contributors are going to be in the more aggressive segments of the funds. And what it does is that you're probably you're looking at significant inflow into equities from the pensions fund. You know, right now, they sold down their equity positions. Last information we had from Pencom, as at mid last year, 18% or thereabouts was invested in equities, and that was lower than the 25% cap. In Q3 and Q4 2011, there was a lot of selling amongst pension fund administrators, and we're talking about perhaps 10% in equities right now. So if you have aggressive profiles and you're looking at perhaps 45% in equities, and you note that pension funds are about 2.5 trillion.
Which will certainly expand the amount that pension funds are risking in the equities market right now.
This could be very important because if you look at the amount we're talking about, we're looking at anything between 400 to 600 billion naira, and compare that with average traded value of 3 billion.
Well, thank you so much, Chibuzo. Thank you. I mean, you've given us a great update on pension fund administrators. Well,
thank you.